So that is everything that you need to know about estate planning. And I would encourage you to pay attention to this because it's an important part of financial planning as a whole. Now, let's go to the here and now. And we've seen over the last few weeks that prices of gold and silver have been on the up and up. In fact, I want to talk about that and what your strategy should be. Navneet Damani, who is Group Senior Vice President and Head Commodities Research at Motilal Oswal, joining me right now. Navneet, I recall our conversation earlier this year when I was asking you about the gold-silver ratio, which essentially it talks about the value of gold in relation to silver, and it was a pretty big gap. And you had said that silver prices could be on the way up. They are, in fact, at multi-year high, 13-year high or thereabouts, if I'm not mistaken. The question is, why are things happening right now? And what's going to happen, in your opinion, towards the end of the year?
Well, thank you for having me on the show. I recall during last interaction, gold and silver ratio was trading upwards of about 100, and we were discussing that why is it that such a great premium that gold is commanding vis-a-vis silver, and why silver has been a laggard. And as we speak, the ratio is cracked down to about 85 levels. That's about a 15-16% gap from where we last had a conversation. Now, what has led to this rally in silver, we'll come to that second, but what is driving gold at this point in time is largely uncertainty, central bank buying, and weakness in the US economy, and how fast or maybe how quickly is US going to turn the tide as far as interest rates are concerned, because they are sitting on a ticking time bomb of what $37 trillion worth of debt, which they have to service at about 4.25%. So all this eventually is going to get built into the US economy, and which at the moment is showing signs of kind of a recessionary fear or de-dollarization, as largely people call it, where Russia, China, and India is coming together. So all these themes at this point are playing in the market, which has been positive for gold prices and have been supported. However, last couple of years, say about 60% returns for asset like gold is something which is very fearful in minds of a lot of investors, and they are a little confused at this point in time. People who have weddings around the corner are confused that whether to buy gold at these levels or maybe wait for a cool-off. And mind you, it is the 11th successive day where gold prices have gained by more than 1% in the last, say, probably 15 trading session. So overall, the phenomena or the momentum at this point is pretty robust, pretty strong, and which is supportive for gold prices. We will not be surprised that if it continues to rally another $100 from here on, and maybe today is a day where you are witnessing some cool off, another couple of rounds of cool off could come in, $50-$70 cool off could be in store, but $36, $50, $37 is where we see gold prices heading over the next few, say, weeks to months.
Okay, interesting that you point that out. And some of the aspects that you spoke about, Navneet, I think the tendency sitting here in India is to think about festive demand and to think about physical gold. But ultimately, what has been moving gold prices in the global markets is central bank buying. It is de-dollarization. It is trade. It is disruption in economic growth and therefore safe haven demand. Do you think all of these things will go away? The way that it looks right now, it seems like that could well be the case in the new normal for the rest of the year.
Well, we've been thinking that these wars which are ongoing between Russia, Ukraine, or other parts of the world will get settled, but we've already celebrated third anniversary of Russia-Ukraine war, and couple of ongoing wars are pretty much in the back of where we speak. So nothing is ended, nothing is getting sorted out. It continues to stay where it is, and these all time and again will keep on providing momentum to prices, but they are not the central driving forces at this point in time. So the current pace of which central banks were buying is not to the pace where what we've seen in 2022 and 23. That point in time, they were buying roughly anywhere between 600 to say 800 tons. But as we speak, the annual consumption from central banks is not more than 100-150 tons. So the momentum pretty much is very strong, and irrespective of how the fundamentals are behaving or maybe what could lead to a cool-off, the trajectory looks favorable for some more upside. So maybe by Diwali or maybe by Christmas, we will be around $3,650, $3,700, or maybe equating to the rupee at 89, around 111, 1,11,000 or maybe 1,13,000 on the domestic.
Navneet, you know, just out of curiosity, I, a couple of years back, looked up how much gold there was in the world. And the number that was thrown up was about 200 or between 244,000 and 299,000 metric tons, which if my viewers are able to visualize, it is about 23 to 28 cubic meters, or a cube that is that much wide and large, right? So it's not a lot of gold. The question is, if so many people are buying gold, will that supply continue to remain, or are people basically buying from each other, Navneet?
Well, there are two things. One, people are buying from each other, as you rightly pointed. Recycled gold is in a very big way coming into the market. So almost 50% of gold this year, what has come into the market is almost recycled gold, and there is fresh mine supply also which is coming in. Fresh mine supply, mind you, is roughly around 5,000 tons in a year, not beyond that, and about 1,000 to 1,500 tons could be the number for recycled gold. But this year the number could be higher because prices are very steep across the globe. Now, typically Indians have a tendency to buy gold and hoard gold. So is the case with a lot of central banks, a lot of Chinese participants, where they buy physical gold and hoard it. So it doesn't comes into the real market, and it is a last sort of resort when you would like to sell gold. So if you ask me personally, I don't have a say I have a say in buying gold, but I don't have a say in selling gold. That is the call which my wife or my parents would take. So that is the case with most of us. So buying gold is easier, but selling it in the market is difficult. So so the recycling is pretty slow in India, but typically the momentum is too much money chasing too little assets at this point in time, and that is why this momentum for gold, silver, or other metals started to catch up.
Which is why I wanted you to talk about the supply of gold. But having said that, and coming to the crux of the conversation, Navneet, what should people do? And ultimately, festive demand is going to be there irrespective of what we speak about. But from an investment standpoint, if you are buying, say, a gold ETF or a silver ETF, which is now available in the market, would you go and do that? And would you continue to allocate up to 15% of your portfolio into gold? Or would you say, I'm going to hold off on buying right now? Because as you pointed out, the gains that we've had are absolutely frenetic.
Well, there's a lot of FOMO in the market at this point in time, and every hour we're getting calls as to what is to be done to gold and silver. But typically at this point, maybe the upside could be about 3 to 5%. Whereas if there is a correction, that could be in the range of 5 to 7% also. So the risk reward matrix is not favorably. Maybe accumulating gold at this point in time, if you have a better alternate investment avenue, maybe look towards that. At least gold is not the favored asset. Maybe you can diversify some towards silver. However, 15% is not the right mix for investment in physical assets like gold and silver. It is typically in the range of 5 to 7.5%, which most of the wealth management teams and other guys are kind of pushing towards. So I believe that anywhere a mix of 5% silver and about 2.5% of gold could be a right mix for your portfolio at this point in time. But wait for a dip, wait for a correction, then look towards buying gold. Maybe a dip toward 1 lakh, 1 lakh 2,000 could be an opportunity for a 10% upside.
Okay, I must clarify that 15% is meant to include whatever jewelry that you said almost never gets sold, right? So all of your exposure to gold. And unfortunately, people don't even value what they have in their lockers, in their cupboards, and what they never intend to sell. But I think we've gotten the crux of it, right? Navneet, thanks so much for joining us today and for explaining, of course, the trajectory that you see for these precious metals. And incidentally, we must give you credit for having called out what you did when we spoke last.
Thank you.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and do tell us what you'd like us to talk about. And meanwhile, stay tuned. This is NDTV Profit.